In this week's episode of the Stockscores Market Minutes, I'm going to talk about why you should love a stock market crash. We may have one coming. Let's look at the bright side. Plus, I will do my regular weekly market analysis. I'll tell you what to look for as to whether there is a market crash coming. We're going to look at the day trade of the week, run a market scan in search of opportunity. That's all coming up. So why should you love a stock market crash? Well, they come along every once in a while, and even minor corrections are actually quite lucrative. You see, when there is emotional selling in the market, it creates opportunity. Weak holders of stocks sell, and so they won't be able to sell in the future. Prices fall down to levels that really create value for the fundamental investor. It motivates people who want to take advantage of the emotion. There's just so many things that happen in a market crash that causes or brings about great opportunity. I've been trading for over 30 years, and I cannot think of a time that there wasn't a great run higher after a market crash. But let's take a look at the chart of the S&P 500 over the last 5 years. And you can see there have been a number of periods of weakness. In 2018, we had a couple of months at the end of 2018, fairly significant sell-off. Then, of course, there was the COVID crash. And then in the last year and a half, there have been a few pullbacks, of which we are in one right now. Well, look what happened after those periods of weakness. Long, sustained, upward trends. And that's really the thing about these market corrections, crashes, whatever you want to call them, is they create opportunity. So it may be hard to go through them, but if you have a disciplined approach to risk management, if you exit your winners when the market tells you to exit, then you will be cash strong for when the opportunities come from a market crash. All right, let's get into this week's US market analysis, starting us off with the S&P 500. You can see the downward trend line was broken on Thursday from a little rising bottom. That's a good sign. We still have resistance here and here, but what's good is that we've broken this cycle of coming back up to the upward trend line and then receding back. So that break right there on Thursday is a real positive. Still a bit of an uphill battle, but looking better. And on the longer term chart, you can see that if we draw that upward trend line, we are below it, but because we haven't really broken down from a falling top, we could just simply be in a pattern that's going to go sideways. So not really a negative pattern yet, more neutral to slightly positive given the upward momentum. On the NASDAQ, we had that sell-off. This is the daily chart of the NASDAQ. We had that sell-off over the last, say, 5 weeks, and starting to stabilize, found some support right here and looking a little better, but still has work to do. IWM has been stuck in that sideways trading range for 7 months, 8 months. And what's good though is that the volatility is compressing. So you can see that the volatility is diminishing into a tight little pattern. Because the trend into that pennant is up, we're more likely to break to the upside. And we'll have to watch for that. But if we can break this downward trend line in the near term and then break the horizontal line of resistance, we may get some life back in those small cap stocks. All right, on to the Canadian markets. And we also see the downward trend line break from a rising bottom. And I expect we'll kind of stall and second guess the comeback. But ultimately, I think we're headed back to those highs right there. Long-term chart, similar to the S&P, little pullback in the upward trend line, but still looks okay because there was no falling top. TSX Venture, really been in kind of a sleepy mode, but not out of the ordinary for the seasonality of it. We tend to see this market quiet through the spring, summer, and into the fall. And in the fall, sometime from now forward, it perks up. So let's watch for a break of that downward trend line. If it can break to the upside, I think we may see some life come back to the TSX Venture stocks. Currencies, this is where it gets interesting. US dollar breaking through some resistance. We talked about that last week. There you see that break. Now it's struggling a little bit with that resistance, but I think longer term, the US dollar has switched from being in the control of the sellers to now in the control of the buyers. Here is the important chart for the week. The chart of Bitcoin has broken its downward trend. Rising bottom, break of the downward trend line. Good chance it gets back to those highs. I've been a bear on Bitcoin for many months, but I'm now interested in it again because it did break that downward trend line. Certainly not as good as this pattern when it's breaking through to new highs from an optimistic pattern. This is more the end of the weakness, and perhaps we will go back to those highs. We'll keep an eye on that. Ethereum had some benefit to the strength in Bitcoin as well. You see the little flag break. This chart was never as bad as Bitcoin's, and I think it too should get back into that level right there before it gets stuck. Commodities, well, gold is in a bearish pattern. You can see the trend went parabolic, broke the parabolic trend. Now we are in a cycle of falling tops towards a flat bottom. That's called the descending triangle. If you bend or if you break down from that descending triangle, you usually go lower. We haven't had the breakdown yet. Low volatility at the floor, and that's usually the calm before the storm. So I would be cautious with gold. The only thing to save it is if it can break to the upside, break that downward trend line. Then we can put gold back in the good box. But for now, it's in the be careful box. USO, the chart of oil, continues to show strength. Broke through resistance 3 weeks ago. Had a little bit of a pullback this past week, but managed to come back before the end of the week. And I'm still relatively bullish on oil. Fear? Well, fear is low. I want to just highlight something though. The level of the VXX here is no different than the level of the VXX there, because over time, these ETFs or ETNs that are based on the futures market decay in value over time. They lose value over time because futures lose value over time. And so when you see this here at the lows, don't be too deceived because it's no different than here at the lows. Essentially what's important is the very short-term outlook. When you get these breaks, these little bits of action, that shows that there's some fear coming in, but right now, no fear, and therefore no reason to be too concerned. So my outlook then, US and Canadian stocks, neutral on both time frames. It's better than last week with the break of the downward trend on the short-term chart this week. Gold neutral long-term, bearish short-term. Oil bullish on both time frames. Stocks found some buyers this week, and that was good. It's an early signal that the market pullback is over. It's not the conclusive signal, but it's a good sign. We're not out of trouble yet, but the markets are looking better. Now, Bitcoin is the important chart of the week. It breaks its downward trend line and has a better chance of getting back to its highs now that it has broken that downward trend line. Gold is relatively quiet, but negative. Oil has upward momentum, but it is losing some confidence. So I wouldn't be too aggressive with energy stocks here because they did show some signs that confidence is waning and fear is low. All right, let's get into the day trade of the week. This is a trade from Thursday. Started off with the action candle at the open. If you've been here before, you'll know that that's always the signal we look for. Abnormal price, abnormal volume causes a spike up in our price test. This is a proprietary indicator that is available to my Stockscores active trader members. And I want to let everyone know that I will be doing some webinars in the week ahead. And so if you go to stockscores.com into the trader training upcoming events area, you'll see a list of those upcoming webinars. I'll also be doing my mentorship class, 20 students for a few months of training, one-on-one, well, not really one-on-one, 1-on-20, but certainly much more one-on-one with individuals being able to answer the questions, that sort of thing. That's the mentorship program. And if you want to learn more about that, just fire an email to tylerb@stockscores.com. I'll send you an email to put you on the list for early registration because that class is limited to 20 people. And so if you have any desires to be in it, it always sells out every single time I do it. So just keep an eye on that. send me an email, tylerb@stockscores.com. Anyway, back to this chart. We have that action candle right there. Because there's a gap, you've heard me say this before, I like to see a second signal. So it goes up a little bit, leave it alone. Pulls back, gets quiet underneath the action candle close, and then breaks through the action candle close. That's the time to buy. And you can see it went higher. For every $100 of risk, 1,240 shares, $8,717 of capital. But you can margin that 3 to 1. So it takes $2,906 to take $100 of risk. At the end of the day, it was up 6 times risk, which means a $600 gain for every $2,906 of capital risked. And that's a 20.6% return on a little less than a one-day hold. Pretty good return. Let's jump into the Stockscores market scan now and run a scan for position traders. I like to do this on a regular basis. The Stockscores Simple US scan. You can see I've selected that there. I've also included price under $20 just to focus us in on the lower price stocks. Found 22. This scan is updated, well, the whole tool is updated throughout the trading day. And of course, in the evenings, you can run scans as well. It's a great way to find stocks building optimism and breaking out. I like this APRE. I'd keep an eye on this one next week. It's been building rising bottoms toward resistance. What it needs now is to break out through that 550 level. And I have a feeling that's going to happen next week. If it does break out through 550, then it should be able to get up toward 850. So keep an eye on APRE. Not there yet, but I like the way the pattern's building, and there's been some volume coming into that stock. Continuing along, this ICLK also has some promise. My main concern here is this downward trend line, which is going to limit upside. So it's nice that it's building a little bit of rising bottoms, but I think it's got a bit more of an uphill battle. This one, EZPW, has left the station. The train has left the station. Enerplus, part of that strong energy sector, it's too late. Here's another one up quite a bit recently, but too late. Always trying to find those stocks that are just starting to come alive and then wait for the break from low volatility through resistance. You can see here on Synovus, downward trend line, build of a rising bottom, break from a rising bottom, break from a rising bottom at 950, 930. Now it's at 1150. It's too late now. Don't be chasing these energy stocks. The opportunity was earlier in September when they started to move. This REKR is building a great pattern. It just needs to make the breakout. There's your rising bottoms. There's your resistance. If it can make an abnormal break through $12.50, $13, I think that's worth considering. Could move up to the $24 level. Not there yet, but something to watch for this coming week. Town Square, TSQ, trying to break from a pennant. A little bit of volume on Friday, but I don't know that the upside is great. So I think it's a good chart, but not a great chart. Maybe a 6 out of 10 chart. Here's an example of too late, but also an example of what you want to watch for. There's the resistance level. There's the break with abnormal volume. Notice how the stock scores spike up above 60, above 80. That is the time to buy. Stock has done great. Now is not the time to buy. Now is the time to hold if you're in that stock, but don't chase it here. That's a sucker bet, chasing those things that are already up significantly in the last little while. We want to catch them when they start to move. Here's another example. Stock that's in this quiet trading pattern, boring, 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 and then comes alive with abnormal activity. Look at how the stock scores spiked up there. $17, now $18.50 for a relatively conservative stock built on cake. All right, well, that has been your Stockscores Market Minutes for October 11th. Hope you've enjoyed it. If so, please click on the like button, subscribe to the channel, tell your friends, tell your enemies, and most importantly, trade well.